Good morning, Kaylee. How you
Good morning,
doing?
Greg. I'm ready for Tuneup Tuesday.
Yeah, me too. Another beautiful day on the West Coast here.
Yeah, sure is.
So today we're going to be talking about something called balance sheets, but it's more than that, right? I mean, it's not just a balance sheet because even though I took some business courses and stuff, I'm not really sure what a balance sheet is. I know what's on it, but I don't know what it does or really how it affects business. And I'm just going to confess that right here, right now, publicly in front of everybody, that if you ask me what is the purpose of a balance sheet, I couldn't quite tell you. Like, how does it affect your business? So do you want to just walk us through a little bit? Tell us like what
Well, that's really exciting, Greg, because in about 15 minutes, you're going to know exactly what it is and how to use it.
Cool.
So I'm excited to share, and in a really easy way, really like simple language, right?
Okay.
So should we jump right in and show you what it is? Or
yeah, let's take a look at it.
So I'm going to share what it looks like, first of all, and then we'll talk about what it is and why it's important to your business, because this is one of the key documents, right? Everybody's kind of heard about P&L and they kind of know they should look at it, but the balance sheet's really unheard of. So I call the balance sheet the truth serum of your business.
I like that.
The truth serum, because you can have a P&L that looks profitable and a whole whack of debt piled up on your balance sheet, or a whole whack of things you haven't actually paid yet. So maybe you've expensed it on your P&L and it's been written off already, but you haven't actually paid the bill yet. So the money's not out yet.
Yeah. Hey, so, can I just remind everybody, like you said something really brilliant last week, which was a P&L is kind of like driving, but only looking in your rear view mirror. So
yes,
because it's kind of backwards looking. Here's what I've done. Does this change? Is this different?
No, this is another rear view looking document.
Okay.
So anything that you get from your bookkeeper is you looking in the rear view mirror at your business of what already happened. And why that's important is so you can start to look at the future. But most businesses are not looking at the future. And the reason it's important, so last week we talked about the importance of having a profit plan and looking to the future. The reason looking to the future is important is you can influence change. When you're only looking back, you can't change it. It just is what it is. And you're just seeing, how it is and how it was. And then you get to plan for the future where you can actually change it.
Right.
So that was what we talked about last week of like why to have a profit plan. So this balance sheet is key to making sure that you get all the right elements into your profit plan.
Got it. All right, cool. So I see a bunch of numbers.
And again, like this is what just makes the shut off, right? Because it's like, I don't want to look at that. And so it's really simple. To give you an analogy, if I went, so this is a hair studio on April 30th of 2019. If I went into their business and I took a picture on the April 30th, 2019, and I took a picture of the company, this is what the company looked like on that day.
Got it. Okay, cool.
So if I took a picture of all the bank accounts, all the things they owed, all the money they had sitting around, all the products they had on their shelf, if I just took a picture of it all, it's represented here.
Cool. So it's like a little snapshot. It's like a little...
It's a snapshot of the truth about where your business is.
Got it.
Where the P&L, you could have the most profitable month you've ever had, but your company could still be worth minus $200,000.
Right. Got it.
Right? So your P&L showing how much money you made that month. So it was income, less expenses, how much money you made, but it's not showing the overall state and health of your company.
Got it. So like in December, our P&L can look amazing, but in January, not so much.
Yeah, our P&L can be fluctuating up and down, but it could look amazing for the whole year, but you could have debt from the previous year. That means your company is still not even.
That's a good point.
Right.
So
this is where you see all of your outstanding things from the past. The profit plan, we're planning for those bills in the future. So we're saying because we don't want, like, this is what happened to me, Greg. I got right before I was going to go to bed, I get this email from my accountant. Like, this is early days of my business because the bills just got higher. And the accountant says, you owe $7,000 GST. And I was like, what?
Yeah.
Where'd that come from? Like, I don't have $7,000. And then I'm like, got this, go to bed with this pit in my stomach. I don't sleep all night, right?
Mm,
I'm
mm.
sure salon owners out there who are listening, you can relate because I'm sure you've had an unexpected bill. So then I get really smart and I'm like, okay, this is not going to happen to me next year. So I'm going to save that $7,000 and I'm going to be ready for this GST bill. And then we grow the business. So the GST is actually higher than $7,000.
Yes.
So then my accountant gets me that email and I had decided I'm not checking email at night anymore because that was not good. I couldn't sleep. So I check it in the morning. And this time I owe $15,000. And I'm
Right.
like, but wait, I only saved seven. Right. So this is where not looking ahead gets you into trouble when you're only looking at the rear view.
Mhm.
So this is going to show you all the money you already owe in your company, but it's not going to show you the money you're going to owe coming up. So the profit plan that we talked about last week, future money owing, this is past money owing.
Right. So this is a snapshot. It's rear looking, so to speak,
Yeah.
like looking backwards. But how does it inform our choices moving forward? How does it make us make the right choice today, tomorrow, and the next day?
Great question. So let me give you the basics of a balance sheet because it's really simple. We have assets.
Right.
So here, assets. Assets are simply things you own.
Right.
Everything I own. So I own all this money in the bank account. So these
And
are
so,
all the
Kaylee,
different.
just one sec. So I noticed like there's bold, and then not bold. So I guess everything you see that's not bold belongs under either current assets and current, like these are buckets, right? So
Yeah.
you have assets, but you've got current assets, and then within that you've got all these other bits. So that's the structure of this, right?
Yeah, exactly. So
Gotcha.
we've
Okay.
got, I mean, we don't need to get into the nitty gritty of all the different types of assets. It's just,
Right.
we've got a category called assets. That's what you own. So that's your value in your company.
Yeah.
And in there, we've got things like cash in the bank. Hopefully, we've got some cash in the bank. We've got money that customers owe us if we put anything on account for them. We've got, sometimes there's money like in the air in Visa. So like the client paid Visa, but Visa hasn't given it to us yet. So it's kind of like living in the air, hasn't landed, but it's still our money. And then this is really important. We've got inventory. And so a lot of salons are not doing inventory counts. And so they're just writing off the inventory as they buy it. And this is an accounting mistake. And so they're writing off more than they're allowed to. And so if they get flagged from the government and get audited, they're going to have to pay that money back. And it's making them look less profitable.
Yeah, nobody wants that. So just quickly, what's the difference between writing it off and having it here on your balance sheet?
So when I go into West Coast Beauty and I stock up on all my color, the government sees that as an asset. It's like it's still what I own.
Right.
It doesn't become a cost to the business until I sell it.
Right.
So until I crack the tube, put it on the customer's head and they go out and pay for it. So if I'm writing off that whole receipt, I'm deducting things that haven't been used yet. And therefore I'm not paying tax on that inventory.
Got it.
At the end of the year. So the government doesn't like that, right? So
really interesting, really interesting. So a way to think of it is, let's say you sold your salon and you sold it with 400 tubes of color. That is something you could sell. You could sell those tubes of color. But if they were all cracked open and half used, you couldn't sell them. You would have already realized them, right?
Well, you're actually realizing the half tube. I mean, if you're doing this precisely and properly,
that's true.
You would still sell it. So, I mean, some salons go as far as like weighing their inventory to write off exactly the right amount.
Wow.
In the Salon Profit Project, we teach you like really streamlined, effective ways to measure it monthly. And then we do a really thorough year-end count so that you are paying the right amount of tax, right?
Cool.
So yeah, and it just shows the value of your company too. If you ever did want to sell, you had an insurance claim, fire, like you need to show that you had this asset. Otherwise, they're not going to replace it for you.
Oh, that's interesting. Yeah, makes sense.
Yeah. So there's so many different ways. Like people are like inventory, ew, I get it. But there's so many like beautiful things that it tells you about your business that it's really worth looking at. And guess what? You don't have to do it, right? Like you're the boss, you're the owner. And so you get to design the system around it and then have your salon coordinator take care of it or have one of your stylists who's really detail oriented take care of it. So you don't have to think about like, I don't want to be bogged down in all of this. You don't have to, you just have to implement it, learn it once, and then delegate it. So I never did inventory in my company. So let's just get that on the table, right?
Yeah.
because that's like, everyone's like, ah, no.
Yeah.
So then we also have all of our like things that we own that are like furniture, or maybe I bought a computer, pretty much anything that you buy over $1,000, $1,500 doesn't again get written off on the P&L. It's something that you own again that has value. So, have you heard the word depreciation, right? You've heard that
Right.
word.
It's where things shrink, right?
Yeah, they
Like a
lose value.
right, like a car. You buy a brand new car, it just depreciates over time till it's worthless.
Right. And so what we do in a company is, so that computer you bought, that hot water tank you bought, those are losing value every year. And the lost value gets written off on your expenses. That
Gotcha.
becomes an expense. The rest of it is a value that you have in your company, right?
You're right.
And
Things like
so,
things that have value, and I would imagine even some things have value that lasts forever. If you have like an antique cabinet that you hang up coats in, or something else that has like a piece of artwork, it actually may increase in value over time, right?
yeah, again, nitty gritty, like accountants just have formulas they use to
Yep.
depreciate items. And yeah, I
Right.
wouldn't go much further than that.
Okay.
But I mean, you could if you really wanted to
Yeah.
start increasing value of things that do gain value. But yeah, let's keep it more simple of like, okay, here's what we own. So that's assets, right?
Yeah.
And then the second part of the balance sheet is your liabilities. So liabilities is everything you owe. So
Yes.
assets, everything I own; liabilities, everything I owe to somebody else.
Makes sense.
You following?
Yep. Yep. So you have stuff, you have things, you've got stuff in your pocket, but then you owe things to other people. So walk
Exactly.
us through that. What is exactly a liability? It's a big word, liabilities. Sounds
Yeah. So
scary.
here's a big one in the salon, right? Here's the big one: amounts owed to vendors. So I went to West Coast. I put it on my account. I didn't have enough money to pay for it, and now I owe them. I see
Right.
like huge numbers on salon balance sheets just sitting there that they owe to the vendor, right? We don't want that. There's like expenses on the P&L that haven't been paid yet. And here's all your taxes. So this section is super important
Oh
here.
yeah, for sure. Absolutely. Those could become big, big numbers, and they can increase, like you say, as you get more successful, right?
Yeah, exactly. So you've got corporate tax installments. Sometimes it shows a negative because you've already been installing, but it's not due yet. So
Hmm.
it shows like you already paid it. GST, HST payable, payroll liability tax. Like a lot of
Sure.
people, again, they get that $3,000, $4,000, $10,000 bill that they weren't expecting because they're not up on their payroll tax. And the bookkeeper's job is not really to plan it for you. So they just whack you with the bill a few days before it's owed,
Right.
right?
Yep.
Right. Everybody knows what I'm talking about. I know,
Oh yeah.
it's painful. It's super painful. And, it took me so many years to get on top of this before I created the tool that shows you exactly what to plan for, because the bookkeepers aren't telling you what to plan for.
Yeah. And these
Um,
are the kind of surprises that none of us like. None of us like.
no. Another big one: shareholder loan. This is another area I'm like, you take all your personal money and you build out the salon.
Right.
Maybe it's cash, maybe you bartered with people, and you never told your bookkeeper. And so all of that money is kind of lost, like, because it's money you paid taxes on. Now you built it into your company and you're supposed to get it back tax free. But if you never recorded it,
Hmm.
then you're not getting it back tax free.
Well,
So a
that's
lot of
that's no good. That's terrible.
it's terrible. So that's what, like Greg, I find people money all the time. It's so much fun because like I look at a new business and I'm like, where's all your startup costs? And they're like, oh, we traded with da da da. And I'm like, yeah, well, that trade just lost you like 20% in tax.
That's
So
a lot.
you could have paid like 10% more and got 20% back. So maybe you should ask them for an invoice. Like,
Yeah.
we're always trying to outsmart and loop the system. And often we end up like hurting ourselves in the end of the day. Like, the biggest McDonald's, I don't like McDonald's, but I don't like fast food, but McDonald's play is to get real estate, right? Like they don't make the main money off of hamburgers.
Right.
They leverage their companies to buy up real estate. And if you're like hiding all your money and you're not putting things on paper, you're not going to be able to get big mortgages or leverage your company.
That's true.
So everything that you're doing to try to like outsmart the system is going to wind up hurting you in the end. And that's one of them. Like, okay, I paid cash for all this stuff. I never recorded it. Well, now you don't get that back. So you want to communicate with your bookkeeper every time you're putting your own personal money into your company so that the bookkeeper can record it properly so that you can take it back tax free.
And it should be, even if you're ongoing, let's say you have a bad month and it's just whatever, you have a bunch of bills and you've got to write a check from your personal line of credit, or maybe even your own checking account, even for $1,000, you need to record that. That should be a
Yes.
shareholder loan to the company, which you can put in that line right there and realize back tax free, right?
Exactly. Yeah. Because you already paid tax on that money. You're borrowing it to your company and then you're taking it back. So there's
I-
no other. But if you just throw it in there, it looks like a sale and then you're going to pay taxes on it.
right.
So there's so many, there's just so much value on here. Maybe you've got some vacation paid. That's a big one where salon owners get into trouble is some of them started paying it on each check. But even with that, you need to make sure you have authorization from them to do that because they might be expecting it to be accumulating. And now all of a sudden three of your employees want to go on vacation at the same time. And you're like, oh, whoops, I spent all your money.
Yeah.
Like,
Oops.
yeah, that's because it hasn't been put in the right bucket, like you were talking about before, right? So
Right.
this is all past money. So this example here has $22,000 of current liability. So that's all money from the past that's still owing and not paid.
You totally need to know that number. I have a question. Does a gift card sit on there somewhere? Like, what happens if you've got
Yes,
300 gift cards? Are they on this somewhere?
they are a liability. They
Yeah.
are a liability because you you've already collected the money. So you own the money. It's
Right.
an asset. And now, but you still have to pay payroll out on it. You still have to pay supplies out on it and you have to redeem it. So it also is, and that's why I saw a lot around with COVID, people pre-selling gift certificates. And it's like, okay, just remember you have to redeem that at some point. And maybe
Right.
you're going to be redeeming it when you're super busy. And now that discount doesn't make sense anymore. Right. So, you have to be careful that you can deliver on all of that. When Groupon was really big, people would get really in over their heads with giving out these coupons and then
Right.
they didn't have the capacity actually to deliver on them after. And that's why people were getting such bad service from Groupon because,
Yeah. Yeah.
right?
Yeah, it
So,
makes sense.
yeah,
And again, if you, let's say you just sold your salon, because sometimes we can think of this as, I'm going to sell it. You have to disclose and show your unredeemed gift cards, because the new owner doesn't want to open up their shop and have a lineup of 30 people all getting services for free, or at
well,
least
and how many people have bought a salon without even looking at the balance sheet, right? That salon could be like hundreds of $1,000s in debt and they just bought it.
right.
So it's just key. It's just key. It's one of the key financial statements. I haven't seen it taught in any other courses.
Mhm.
I've been to quite a few courses. They always talk about the P&L. And so, this is just key. And so now the third part is equity. And so what's equity is just the difference between the two. So I've got
Okay.
everything I own and everything I owe, and equity is the difference between the two. So it could
Gotcha.
be a positive number or a negative number.
Right.
So if I have more things than I owe, I'm going to have a positive equity. If I have less things than I owe, if I owe more than I have, then I'm going to have a negative equity.
Right.
So
And
it's
so that's
normal for new companies to have a negative equity because they've got all these startup costs on there, right? And then you just want to start to see that dip up. So that's, this shows things from last year, what you got paid, blah, blah, blah. But what's important here is the equity. So this company's current value is worth $60,000. So this is what you want to do. It's a little homework assignment, is for everybody to ask their bookkeeper for the most up-to-date screenshot of your business. So most up-to-date balance sheet. So sometimes, they're getting like January's balance sheet. Like, I don't care about January anymore because a whole bunch of these things could have cleared or a whole bunch more could pile up. So I just want my most up-to-date that they could provide me. So what's the date today? Like August. So I want June. Right now I want June balance sheet.
right.
and I'm not selling for anything else.
Yeah.
Like, don't give me March. It's completely different. If I have a March balance sheet, it does not look, the picture is not going to be even close, especially after what we've been through. So, homework assignment, get your June balance sheet from your bookkeeper and check your equity. Just check this number, and then see what are all these things that you're going to owe and how you're going to plan to pay that. And if you find it scary and overwhelming, that's where we come in. We can support you because we can build that profit plan. And that is where we can see, like, how much cash do you have to actually be able to start tackling these things? Because the other thing we don't know, Greg, is that all these taxes are paid out of profit.
Yeah,
And
that's a
all
good
of the
point, right?
debt
They
is
are,
paid out
yeah,
of profit.
that's true. They are paid out of profit. You have to have profit to pay your taxes. That's where they come from.
Yeah. So that means, if we don't have any profit and we still have to pay all these things, that's where we get into cash flow trouble. All of our loans are going to be paid out of profit too. So the
Right.
only thing that gets written off or deducted is the interest to the loan.
I'm
So
thinking of a lot of cases of salons and spas and barbershops who took advantage of any of the government programs. And many of those are sort of a loan, right? Are they not? And
yeah,
they would sit here.
they would sit here, they would acquire that debt. And a lot of them are thinking, oh, I'm just going to pay it back and keep the 10 grand, but they haven't made a payback plan.
Right.
And so I did the calculations a couple months ago. And if you started paying that 40 grand back now for the deadline, it was something like 1,500 a month.
That's a lot.
Yeah. And so if you wait until, like, let's do 30 grand over 1 year, uh, 30 grand you want to pay back, right? Let's
Yep.
pay it back in 12 months. That's 2,500 a month out of your profit. All of a sudden that's going back to that loan, which
Right.
is why, you only want to use it if you've got this profit plan and you can see what your dip's going to be and you can see it recover, and you're just going to use it for the dip. You're not actually going to, you're just using it to get through the dip, but
Right.
you're not actually spending it on other things, because
Yeah.
that's going to get
It's
you
a
in big
bridge.
trouble.
It's a bridge that you have to give back.
Exactly. So I think that, they're just thinking it's easier to pay it back than it is, because it's actually already down to quite a big monthly number.
Gotcha. So you have to have this on this sheet, otherwise it's sort of invisible. You don't know about it. It's kind of in the back of your head. But so are all these other things too, and this can really be a big surprise for people down the road, right?
Huge. Yeah. Huge surprise. And so we just want to see this going in the right direction. We have another word called trajectory,
Mhm.
which we could just call trend. Like, which way is your business trending? Does it have less value than last year or more value than last year? And if once a business is trending a certain way, it usually stays on that path unless something significant has happened.
Yeah.
It might go up and kind of flatline. You kind of have a warning before it's going to go down again. So you need to see, okay, get your last year's to compare a few years. Are you getting less value or more value? That's a great place to start too. Because if you're getting less value every year, you don't want to keep digging that hole, and you're going to have to do
Mm.
something different.
So you called this earlier, you called it the truth serum. Do you want to just, I'm totally seeing now where the truth is. This is sort of like, it is all laid to bear. There's nothing hiding. Like you were saying, all these things we kind of, shareholder loans and government loans and taxes payable and stuff like that, you can kind of forget about them, put them in a drawer and pretend they don't exist. But this really, here you go. So
Yeah,
is this
exactly.
why you call it the truth serum?
That's why I call it the truth serum, because it's really the truth of the value of your company. And so we can have a sexy looking P&L. We can have an awesome team. We can be winning awards. We can have the doors of our salon just in and out, people coming in and out, and we can look like this top awesome salon. And this is going to tell us the truth about what's actually happening in the company. Sometimes I talk to salon owners and I just know the math doesn't add up. And
Right.
they're like, no, my salon's great. And I'm like, just give me your balance sheet.
Yeah.
Just give me your balance sheet and we're going to see, right? Because the numbers aren't adding up for me. So that's what I want to see from these companies that look good on the outside. This is the truth serum of the company.
Well, I feel way more enlightened, and I get it now. And this is a super important document.
Yeah.
I get it. I can see how this can, and it's pretty simple when you really look at it. It's cut two chunks, right? What you have what you owe, and what's left, like the difference between the two.
Exactly. Super simple, right?
Yeah.
Let's not overcomplicate it. We just take
No.
a snapshot of the company, we see what's going on, and then we plan for the changes. And that's what we do in the Profit Project is we take all these liabilities and we make a profit plan for how we're going to get rid of them. And that's
Yeah.
going to add value to your company. So when you want to sell it, you can say, look at how valuable my company is, right? This is going to show, or when you want to get a mortgage, you're going to say, look at the value I have sitting in my company. So these are all like really great things of building up your financial future to have something to show for your hard work, right? I want the end game for salon owners to be like, I own my home, I travel,
Yep.
I've got my retirement all mapped out,
Yep.
not like, oh, I have a company minus 200,000 and now I just close my doors. Like that's not the end of the story that I want to see for salon owners. So I'm out cheering them all on and just trying to make this simple because it is simple when you really look at it, when you really break it down.
Yeah, especially when you get to know these pieces one bit by bit, like that little shareholder loan, and just like you say, you want to be able to retire with dignity, put your kids through school, not either get out of your parents' basement, live in your own home, raise your family the way you want, travel, whatever you want to do in life. You can have those things provided you get this little one-page, easy peasy document, and just under your belt, really.
Yeah, exactly.
Thanks, Kaylee. Love it. I'm
Awesome. Well,
feeling way
thanks,
more
Greg.
balanced.
You feeling balanced? Well, that's what everybody wants. So you're in a good place.
See you again next
Thanks.
week.
Thanks for having me. We'll see you next week.
You bet,
You
Kaylee.
have
Take
a
care.
great day.
Thanks.
Bye,
You too.
everyone.
Bye-bye.